The following is a presentation of TFNN. Live at TFNN, The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, the author of Mastering Probability, Steve Rhodes.
Good day, Money Masters and Treasure Hunters. Welcome to the December 2nd, terrific Tuesday edition of Hour 2 of the Trader's Edge. I'm your host, Steve Rhodes, and I hope that you're off to a great start of your day. Let's make sure that you and I, that we do everything we can to squeeze everything we can out of Tuesday. You know, what's talked about is a dream, folks. What is envisioned becomes exciting, and what is planned, well, it just simply becomes possible. But here's the deal, and you know it, what's scheduled becomes real, and I want to say how grateful I am that you've scheduled some time with me here this morning. I will do everything that I can to serve you. Of course, you can give us a call at 877-927-6648, or internationally, 727-445-1044. Then together, you and I, we can go rip apart whatever stock chart, indice chart, currency, commodity, whatever it is that you're looking at. Remember, if you've got a question out there, that's the best time to call in, because someone else has that exact same question. So don't do it for yourself. Don't do it for me. Do it for someone else out there. A random act of kindness. And that's the way to truly kick off your day. This is Terrific Tuesday. This is TFNN. I'm Steve Rhodes. Welcome to the show right now. We got the Dow trading up 63 points. Trading on to 17,839. S&P up 9. Trading at 2,061. Composite up 22 points. Trading at 47.50. Russell up 11 points. Trading out at 11.65. Goldilocks back 18. Trading at 11.99. Silver back 25 cents at 16.40. Light sweet crude is down $1.62. Trading out at 67.40. Leading the charge, the upside in a big way. Biogen up 6.5%, almost 7%. Up about $22. Regenerate Pharmaceuticals up about 1 7/10%, up $7. Canadian Pacific Railway up $4. Intercept Pharmaceuticals $4. The IBB iShares, that's up about $5, $4.70. FedEx up a couple of dollars. Priceline's down $11.70. Vince Holdings off $6. Rand Gold down $2.68. Illumina off a couple of bucks. American Tower down $2. Mattress Firm down $2. Workday down $2 as well. Okay, so where are we? All right. You may recall, if you listened to the shows yesterday, or if you're certainly a newsletter subscriber, you know that on Friday, while most people were sleeping, we were not sleeping at the switch out here. What we saw that took place on Friday, we got a reversal move. We also saw a one-day rate of change inside the VIX index, greater than 10%. Folks, since 2011, 80% of the time when we see that, we have a bounce, at least a bounce, within 48 hours, within 2 trading sessions. We certainly did not get that yesterday, but we are getting that today. So that is just simply living up to that fulfillment. So that should be an expectation. We've got that. Now it's going to be, hey, how does this day end? So we got the bounce. This could be the high. I don't know whether it is or it isn't. What I am saying is that what we're seeing in the market is something that should have been expected. If you go back from the beginning of the VIX, I can tell you that it happens 70% of the time out there. I know because I've studied it, because I've gone and I've applied every single instance to come up with those percentages. So those percentages are real. I've done the work. You go do the work and see if you come up with a similar type percentage out there. So that is coming into fruition. Now, the question is this a counter trend? But now we're also into December 2nd, right? So the end of fund buying ought to be, what, today and tomorrow? Something like that out there. Yesterday should have been a big day. It was not necessarily. All the buying was met with some fairly intense selling out there. Not totally intense, but, you know, this is, so far things are actually playing out like they should. Let's go take a look at the ETFs. Let's just try to get some type of feel as to what's going on out here. Let's take a look at the QQQ ETF. Let's look at it on a daily chart out here. Yesterday, what did the Qs do? They actually gave us the first time we've seen a reversal signal inside of the Qs. Was the first time. First time since the low on October 16th. Otherwise, not a single cotton-picking reversal signal. bearish signals, really what I should say, right? Yesterday was it. It's the first time that we've seen one. How about that? That's a bear separating line out there inside of the QQQ. Volume to the downside, 35 million shares. Forget about Friday's session, 17 million. But if we take a look at the prior session, 18 million shares. The prior session at Doji, 17 million. The prior session, 17 million. 34 million down here on the trading session of November 21st. Now, interestingly enough, that had 34 million shares. Yesterday was 35 million shares. So it's pushing down. Not a swing point or anything along those lines out here. Price was pushing in there. Now, if we take a look at where price is traveling right now inside of the Qs, you've got a new market profile that formed here today. So it formed its point of controls at the 104.82, your 105.11 out here, until price clears the November 28th high, Friday's high, 106.25 out here. We've got the potential for a pullback. Where could price pull back to? Well, the first places to look at, I would have to say, are probably going to be this little gap up that took place on October 31st. So inside the Qs, if you're going to look for a number on any kind of pullback, it's assuming. So we already know if it takes out the highs out here, the 106.25 level, forget about any kind of retracement that Stevie is anticipating, that the charts are suggesting that we should see. I say forget about it. Pack it in. You know, the markets move onward and upward. However, if the markets do pull back from here, which I suspect that they're going to for a period of time, the next area for us to really be paying attention to is 101.07. Now, at 101.07 happens to be the bottom of the prior TAS market profile out here, right around that area. So that should be a level of good support. You want to measure volume as price is pulling back out there. That's what's going on inside of the Qs. We go take a look at what's going on inside the diamonds. The diamonds, a whole set of a whole different set of circumstances. I don't know what's the right word out here. It's a whole different animal out here. Now, in the case of the diamonds, no such reversal signal really to speak of that's of any significance. What we know is we had a swing point that made the 1-to-1 A to B equals CD. It did that on November 21st when it got up to 178.60. 178.47 was your 1-to-1 A to B equals CD to the upside. If, in fact, the Dow is able to take out the high of Friday, November 28th, at 178.69, that says, oh, yeah, I'm going to go up to the next level. Next level inside the Dow Diamonds is 183.96. So we'll certainly keep an eye on that. If we take a look at the IWM, the Russell 2000, up about $1 right now, 5.3 million shares. The Russell 2000 over the last couple of days first moved down on Friday with 21 million shares. Partial trading session, only open till 1 o'clock. Yesterday, down with 36 million shares. Russell 2000, in its sneaky way, just simply is in. So it got so many different consolidation patterns, and voila, it's got another one out here. So the consolidation pattern inside of the IWM from somewhere around 115 to 118. So about a $3 to $4 consolidation pattern. Volume so far today, as I say, 5.4 million shares. Yesterday, pushing down with 36 million. So pretty good volume for 45 minutes of trading. If that volume were to pick up and were to move higher, you'd have a nice sign of strength out here. I don't know that we're going to have that right now. All we have is an inside day. If this is how the IWM completes its session, meaning it doesn't intraday get above 116.47, and you have an inside day, it says the prior trend is likely to continue. That is the candlestick pattern inside the IWM. Let's go take a look at the SPY, up 77 cents with 16 million shares as we speak. Yesterday moving lower with a volume of 103 million shares. So the SPYs here, yeah, still pretty good volume, just like the IWM. We'll see if it can hold. Now, the SPYs here, what the SPYs have to do, what they did yesterday, or what they didn't do yesterday, really a combination of both. If we take a look at the last time that the SPY broke out, it takes us back to November 21st. That breakout session had 142 million shares. That created a gap out there. Certainly no gap inside the futures market, but a gap inside the SPY. Gaps mean something. Gaps are nothing more than a sign of strength or a sign of weakness on the way down. They're basically wide-ranging bars because you're going to go ahead and start your prior session at basically the close of the prior bar out here. You got to fill in those levels. So as we take a look, 142 million shares. Yesterday, price pulled back with 103, and what it did was it found support at the top of that gap. That means the November 20th high, 205.71. Didn't have enough to actually push it down. Now, what we might be seeing, volume's got got to truly lighten up if we're going to see a counter trend rally here. That means it's got to lighten up over the next 4 or 5 hours out here versus what we've seen during the first 45 minutes. Maybe setting up a small A to B equals CD to the downside. Won't really know if that's even the case until we see how the SPY here closes today. So that's what's going on inside those four ETFs. If we take a look at the VIX index, what do we know about the VIX? Yesterday, the VIX got up to a high of 1475. 1456 was its 50-day exponential moving average. That's good news for the bulls, and bad news for the bears out there. Bad news bears. That was sounds like a movie or something out there. And why is that? Because until the VIX gets above the 50-day exponential moving average, a market will either move sideways to higher out here. At this stage, we're trading at 1343. 1452 is the 50-day exponential moving average. Now, if you're a bull and you see a move above that, and I don't mean 1453, I mean a move above that level, then that says tighten up the stop. It says, if you're an intermediate term trader, sit tight, you're okay. If you're a long-term trader, sit tight, you're okay. If you're a day-type trader, swing-type trader, and you see the VIX get above the 50-day exponential moving average, make sure that you readjust your stop or take a look at your trading plan out there, because that's where things can start to get a little bit out of control. Are we there yet? Absolutely not. All right, so that's with regard to the VIX. Now let's go take a look at the changes in trend, potential changes in trend that are out here. We've got two of them in store. We've got the New York Stock Exchange, the NYSE. It's price oscillators minus 0.1768. So long as it stays below zero today, it tells us that the sellers are in control. Right now, as we speak at 10:17, I can tell you, no matter what it looks like, the sellers are in control when it comes to the New York Stock Exchange. We've seen a change in trend signal. We saw that yesterday. It should continue today. It doesn't have to. There's nothing I can do. I can't write anybody. I can't do anything to change the signals out here. We'll just have to wait and see how things play out at the end of the day. The NYSE currently has an inside day going. That means if that's how the NYSE closes out, it means the prior trend, not the longer trend, the prior trend, the one we just came from, should continue. That's how that plays out. Inside of the NASDAQ Composite, NASDAQ Composite right now is at a minus 1.50, says that the sellers are still in control at the desk of the composite. We haven't seen much in the way of any kind of price move either. If we see a continued move below the zero line of the price oscillator, it says sellers are in control. What does that mean inside the composite? Well, when we took a look at the Qs, we took a look at the support line that was set up by the low of October 31st. Inside of the composite, that's 46.1658. That's going to be your first area that you would look at to see how price is holding that level. If it doesn't hold that level, 45.7550. If those levels fail, it says we have a deeper retracement going. Now, when I say deeper retracement, inside the composite, a normal, viable retracement would be price getting to 43.81. I don't know if it can do that. If it does do that, everybody's going to throw in the towel, and I'm telling you, don't throw in the towel. That's nothing more than a 0.618 retracement. That is a normal retracement. If price doesn't get down there and then price starts to move higher, man, oh man, it's going to be a really nice Christmas. It'll be a really nice Santa Claus rally. This is Steve Rhodes. This is TFNN. We'll be right back.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzavento, Andy Hecht, Think or Swim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's up 57 points. S&P is up 7.5. Composite up 20. Had a during the first show. If you didn't catch the first show, might have been the third segment. I went through a fairly detailed analysis of the S&P 500. So you can check out that archive by way of going to Channel 9 on Tiger TV. I imagine that archive will be up in the next hour, if not already. I did have a request if I could just give out the numbers or take a look at the NASDAQ composite. So let me go ahead and do that. That came in between the shows out here. So I'm just getting around to it. Now, what we're taking a look at, I'm going to take a look at two different tools really here inside of the NASDAQ composite. The two tools that we're going to look at the horizontal trading range boundary lines out here. And if we take a look at that, right now what we saw is the month of October, we saw price push up into its next primary horizontal number. That's 46.53, a stiff area of resistance. And price in the month of November was able to power through that level. Now it's the NASDAQ that's going to go ahead and lift this boat even higher. Now and so you're above 46.53. So as I take a look at markets pulling back, potentially pulling back. I gave a number inside of the S&P 500 that would be ideal for it to pull back to and take a look at its monthly chart. Inside of the NASDAQ, that number is right around the 46.53 type range out there. Let's not worry about it to the T out here, but it would be nice to actually see price now pull back, test that, reject it, and then its next move up will take into that 5,068. Now, at 5,068, you get very close to the March 2000 high, which is 51.32. What we know about this is that price has been inside this swing point here for several months. When I say here, the March 2000 swing point. Once you get inside the swing point, chances are, and you close inside it, which it has done for a number of months here, chances are you're going to go test that high. So that is really what's going on. That also says that what we likely see is a run here inside the composite up to probably the 54.80 level. That is on the longer-term chart. Now, if we turn on the A to B equals CD tool, let me do that, and I just give you that just so we kind of keep things coordinated with regard to what I did during the first hour for the S&P. If we take a look at the A point down here, it's going to be down March of 2009. No surprise there. Your B point's going to be May of 2011. Your C point's going to be October 2011. Well, we can see here inside of the NASDAQ composite, well above the 1.272. It's moving up towards the 1 to 1.618. A to B equals C. To the upside, that price target is 49.23. 49.23 is pretty darn close. PDC to 5,068. I'd have to say, and then no reason for it to not test the top. We've got another confirmation here that price wants to move higher. Now, if I go ahead and I turn off the A to B equals CD tool, I turn off the NASDAQ, the horizontal trading range tool, and we take a look at just simply coming off of this November of 2012. If we look at November 2012 out here, and this is a monthly chart, is there anywhere along the way that you can find a bearish reversal signal? Anywhere along the way that you can find a bearish reversal signal? And the answer is absolutely, positively not. It's not out there. It doesn't exist. It has not happened since November 2012. We're now November. That's 2 years, folks. 2 years. So what does that mean? Well, what it means is that a market never is going to turn until the bears show up. Or the bulls, a market that's going down, light sweet crude, gold, things of that sort. The earliest possible turn is going to be where there's going to be a sign that gets painted out there. That's the real benefit of Japanese candlestick charting. If you would really like to master Japanese candlestick charting, I can do that for you. I would love to do that for you. If you are trading these markets, if you are trading without recognizing the signs that are out there, stop. Don't do that. Let me share that with you. Let me share with you exactly what it is that you need to know. And the easy way to do that is to go over to the homepage at TFNN.com, go over on the left-hand side, that little up and down arrow carousel, click on the 7-week trading course out there. It's a coaching, a mentoring, a hand-holding session. It is everything in order to be able to empower you to unleash that trader within you. And the only way to really do that, the only way to not have to worry about what Steve says or anybody says out here, is to do the work yourself. There's nothing more, in my opinion, there's nothing more empowering than being able to do that. It is not that complicated. It's complicated if all that you do is read books or you don't start to immerse yourself into it. And so let me take some of the immersion, the 10,000 hours that I've done, and share that with you over the course of this next 7 weeks. It doesn't matter that you missed the first live workshop out there. It's archived. It's going to be on your members page, through February out there. You've got access to me by phone, by Skype, by email, so that I can clear up anything that is confusion. Because I know if you're confused about something, it really means you're just about to learn something. So it is the holiday time, folks. All kinds of money being spent for gifts. No better gift than the gift of your own education. Get on over to the homepage of TFNN.com. Sign up for the 7-week trading course. This is Steve Rhodes. This is TFNN. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. EverBank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow, she's up 49 points right now. S&P up 7. Russell's up 11 points. Let's go check in on some of these equities here, popping and dropping. Talk about popping off to the races. It's Biogen. What's the deal? I don't see anything. Soaring on positive Alzheimer news out there, so that'd be pretty cool. But let's go see what the traders are doing here with Biogen. So you see nice wide-ranging bar, accelerated price volume here today as it gets into the now it's swing point high that it's dealing with. It's not up there yet. Let's put this on a weekly chart here first. Let's go see what the weekly chart shows here. Okay, so here's the swing point, just to see what it's trading in. So the swing point high, yeah, it's trading inside it right now. That swing point high, by the way, takes you to it's a weekly chart, the week that began March 17, 2014. So I imagine it's March 21st out there. So now the volume out there on a weekly basis with 11.5 million shares. We're only into the early part of Tuesday. We're at 4 million shares. So pretty good chance. It's pushing into that swing point with volume. That should say to us that Biogen ought to go test that 358.89 level. Now, if you're one that's trading the IBB or the BIS or BIB, I think it is, or all the different ETFs associated, I don't know what Biogen, I don't know what the weighting structure of Biogen is with inside that. But on a weekly chart, that is the message that it appears to be given. And today, with a nice gap up with some good volume behind it, there's no reason to think that that would not be the case. On a daily chart, is there some type of supply area that this thing is hitting? Absolutely not. I don't see anything of any significance to really get in the way of it going up and testing. Now, it doesn't mean it's going to test it this week necessarily, but it does mean that that is what Biogen, BIIB, should do. If we take a look at Regeneron Pharmaceuticals, that's up $8. That's up 2%, so not up as much. But on its daily chart, it's completing a 1-to-1 A to B equals CD. It's sort of really complete, not sort of. It really completed it back here on November 19th when it got up to 419.27, got up to 419.87 is the completion of that. But there's really nothing of significance, bearish-wise, of any real significance here, other than, well, it did have this downdraft, but it's cleared that level. That was back on November the 4th out here. So the next level up, which looks like to me is what Regeneron Pharmaceuticals wants to do. Looks to me like Regeneron wants to get up into the 447 level out there. Again, go take a look at the weighting structure inside of the IBB. There might be those that would say the NASDAQ cannot go down without the IBB. I don't think so. The composite yesterday turned negative. Turned negative from the standpoint of the price oscillator dipping below zero. So, this is a sector here that still looks to be on fire. Well, the IBB actually happens to be up here. So that's up $5. So let's just simply go check the IBB and see what it is doing out here. Now, if we take a look at, this could actually be setting up a very large A to B equals CD to the upside. The swing point on this is a daily chart, is October 31st. Big move up right on October 31st across the markets. No difference here in the IBB. 302.98, 1.7 million shares. When price got over that, it was 824. That was on November 26th. Thanksgiving, that was the day before Thanksgiving, right? So kind of hard to really use that. So we'll use today's volume as the test, as the guide. You're at 538,000 shares. We've been trading for 1 hour. 1.7 million shares is all it needs to take it out. You are likely going to get a confirmed A to B equals CD to the upside inside of IBB today. That would take you to, this is the short term. This is on the daily chart. This says 341, maybe 356 out there. Now, it's going to require a close above 302.98, but it looks like it has the volume as we speak right now. Let me put this on a weekly chart. Let's go see what the weekly swing point has, just to really kind of keep this in perspective out here. Well, here's one. Shoot. There's A to B equals CD patterns all over this IBB. Here's one here, the weekly swing from February 28th of 2014, 8 million shares there, and you crossed it with 7.6 million shares. Not too bad. 7.8 million shares the following week, meaning October. Is the ticker symbol. Cypress Semiconductor, what is this? Cypress shareholders alert. What's going on here? Let me see what we've got here. You own shares expansion. Did you purchase any shares prior to? Oh, some type of shareholder alert out here. And I'm not going to spend time reading it, but let's just take a look at this thing. It is, it's moving topside in a big way out here today. So far for the week, this is a weekly chart. We got 15 million shares moving to the upside. This thing is at all-time highs for sure. Let me see what the daily chart, big volume to the upside. 13 million shares as we speak right now. So where's this thing going to head to? Let me just take a look at expansions of swing points here. Let's just use that as one of our tools right now. So it looks like 29.41, the 1.618 is probably its next level as far as its price target during the move that it's in as we speak right now. Let's take a look at the Intercept Pharmaceuticals, nothing but pharma moving to the upside out here. And the composite's only up 17 points. So just kind of put that in perspective out there. So Intercept Pharmaceuticals, that's up $4. That's nothing more than just a small little counter trend rally out here. This might actually come to fruition. You got to love this. This thing had broken out, you may remember, back at about the $71 range back on January the 9th, January 8th. Well, January 8th, it closed out at $72.39. The very next day, it opened at $231. You're inside that gap. No idea whether it'll come all the way to the breakout back there, but if it does, that would be pretty cool. That would be textbook. That would be one to go in Tom's third edition of his book. not that he's writing one, but we'll have to send him that chart if it really does come back to that breakout area out there, just to totally prove the point that price comes back to a breakout area. Hey, let's take a look at Royal Caribbean Cruise Line. Do you like going on cruises out there? I do, but they're on the type of cruise ships that are maybe like 120 feet long, not the ones that are football fields out there. Nonetheless, Royal Caribbean Cruise Line's here gapping up this morning. Volume behind the move, 3.3 million shares. Royal Caribbean RCL is the ticker symbol. They are going to be a part of the S&P 500, I believe, at the close on Thursday. So looks like that is probably behind some of the buying out here. If I put this on a weekly chart out here, the weekly chart, these are just such huge A to B equals CD patterns to the upside. Its swing point, the week of September 15th, 5.9 million shares. That was taken out with 6.9 million shares. So, you've got confirmed A to B equals CD, the upside. And if I were to give you the price target on a weekly basis, let's see, 31 to 69. So you have another 30 points on top of 51. So you get $80. Well, let's go ahead and put that in here. Let's actually give you the exact numbers out here. Here's your A point all the way down here. So I go and click and clack. Come on, click, would you? Oh, I got some other kind of problem out here. What's the deal? There we go. Click. There we go. So here's your A point. There we go. My B point is out here on September 15th, the beginning of that week, and October 13th. There's your C point. So 1 to 1 A to B equals CD says $90.26, more likely 100.58. So that would be a nice healthy move inside of Royal Caribbean Cruise Lines. RCL is the ticker. I guess I just say Royal Caribbean Cruise Limited is the company name out there. All right, let's take a look at some things moving to the downside, and then we'll go take a look at currencies, maybe some commodities. How about the U.S. dollar? Well, I said moving to the downside. You can't choose the U.S. dollar index. It's moving to the upside out here. But let's take a look at Priceline. Trading out at $11.35 out here, down $16 and change. What we know about Priceline, it completed a 1 to 1 A to B equals CD. Formed this little morning star pattern out there. That price completion was at the 1038 level. Has bounced a bit higher, running the resistance at the TAS market profile. Looks like it wants to come back and visit this 1038-ish area, and that is on PCLN, Priceline out here. We look at Vince Holdings, VNCE, off 13% this morning. If we take a look at it, see where it is trading down to. So this is an IPO. This is a weekly chart, but takes us back into November of 2013. Let's take a look at the daily time frame here for Vince. Wow, what a wide-ranging bar today to the downside with volume. It's off of its session highs out here, but already 2 million shares to the downside. This thing has come back into an area where it had broken out. Let's go ahead and remove a couple of things off of the chart. You can see the actual breakout area out here inside of this. This had a wide price spread. Volume, not so much. I mean, volume-wise, 1.2 million shares out here. Nonetheless, that price point of 28.61 is where price in essence pulled back to as we speak this morning. It didn't get all the way down there. It got down to 28.79, but a lot bigger volume. Probably says this thing comes back and revisits that area. That is ticker symbol BNCE. Have a request to go take a look at First Solar out here, FSLR. So let's go take a look at that FSLR, see what it is doing, what it's trading at out here. First Solar, a little bit of just a counter trend move here. This thing has gotten back below an area where this had broken out with wide price spread. That was back in March of 2014. Let's pull this back further, see what we can find out here. Here's an original breakout area. So here's where it's actually pulling back to. This equity broke out. Let's put a line across the screen out here. That breakout session, in essence, is right there, Johnny, on the spot. What I like to use, folks, is the breakout took place on October 18th. I like to come back a couple of bars and try to find the smallest volume bar that I can, preferably if you can get back to a swing point. Well, if we go back to the swing point, just to give you a range, that range would say 40.53 out here. So prices now come back into a breakout, an original breakout area, and that is on First Solar out here. Come on, don't mean to do that. Okay, great. So that's what's going on there. Now, if we take a look at, if these levels fail, 45.31, 40.53, let's see, did this thing break this B point with volume? That's 4.1 million shares on October 14th. and it broke it with 4.2 million shares. So the answer is yes, it did. That would set up a very large A to B equals CD to the downside. If these levels here fail, and at this stage we have no reason to believe that they won't fail because we've not seen any kind of bullish reversal signal. We do have price point back to an area where it broke out. If those levels fail, it says 36.13 to maybe 29.70. But first, it's got to break through the support of 45.31 and 40.53. That's what the daily, let me see, those lines will stay over on the weekly chart for me. See what the weekly says. Okay, the weekly says here is the actual breakout. Oh, how about that? 2601 is where First Solar began breaking out, and that was down at 2566 or so. That was on April. The actual breakout session was the week of May 8th, 90 million shares, and the low price was 2632. So 2632, if it breaks at A to B equals CD to the downside that I gave you, the 1 to 1.272 takes you to 2970. I would say wait for it to come back to that breakout area. That is on First Solar. Let's go take a look at Solar City. Go see what it is doing. SCTY. Try saying that 3 times in a row without really screwing it up. You'll find out not so easy to do out there. In the case of Solar City, she's pulling back into this looks a little bit better than First Solar does. If we take a look at Solar City, this is the daily chart. It's got a daily swing point October 15th. No surprise there. 7.9 million shares. You've done 823,000 today. Let's see, has it tested that area? It has not. Yesterday's pullback, 4 million shares. So 4 million coming into 7.9. Looks like Solar City wants to go down and test 45.91. If it can test 45.91, do it with less than 7.9 million shares, and then you see a reversal signal or a sign of strength out there, it says the move to the downside would be over. If not, then it says that the area for the next area to potentially take a look at buys are where this thing had broken out back in October 11, 2013. 17 million shares to the upside out there, and that's somewhere between a price point of 41.85 to 38.50. Let's go take a look at Sun Power. I believe it's Sun Power, SPWR out there. It is Sun Power. Let's go see what it is doing now. This is trading below its most recent swing point. So as we take a look at Sun Power, that swing point, by the way, daily chart was from October 14th. I suppose no surprise there. 3.7 million shares. Yesterday broke it with 3.8 million shares, broke with volume. What does that say? That says you've got a confirmed A to B equals CD to the downside. This looks like the second one. The first A to B equals CD, that took place off of the high out here inside Sun Power. That was the June 27th high. The B point was the low on August 6th. The C point was the September 8th high. This made a 1 to 1.272-ish A to B equals CD. We saw a little bounce. We saw a little bit of a bullish engulfing candle followed up here on October the 16th. It had a very shallow retracement. Now we've got the second A to B equals CD to the downside. Your A point now becomes your C point from September the 8th out here. Your B point is that little doji candle on October 14th, and your C point is the November 3rd high. 1 to 1 takes you to 1940 to 1575. Now let's put this on a weekly chart and go see what we see at the 1940 level. Voila. You have the breakout, one of the breakouts inside of Sun Power. Sun Power very likely headed to the price level. Well, come on, do this real quick before the breakout here. It should be about, I'll just have to give it to you, 1808. This is Steve Rhodes, TFNN. We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow's off 46, S&P, did I say off? Up 46, S&P up 8, composites up 19 points. To close out, I think all of the questions that have come in so far this morning, the final one that I see out here actually was the first one, just kind of going in reverse order out there. Natural gas, the question was, has natural gas formed a bottom here? Well, if we take a look at the natural gas contract, let's look at a couple different patterns out here. Number one, if we take a look at the retracement level coming off of the October 27th low. This is the what is this? The January contract. Yeah, it's January contract that we are looking at. So if we come off of that low, which was out at priced at $3.70, all the way up to the high on November 21st out here at 4.689. What we will see is that price yesterday as well as today tagging and touching and holding the 0.786 retracement. That's at 391. Now, yesterday was a gap down, obviously coming in off of a weekend. You don't like to move into a retracement level. You don't like to come into any kind of pattern with a gap. Well, let's just say if you're looking to buy and you're looking to buy a retracement or Gartley or what have you, you don't like to see the buy coming in with a gap. No more than you want to see it coming in with wide price spread. So this says here you kind of have to sit tight. There's also an A to B equals CD to the downside. So if in fact natural gas, and this is a daily chart, has in fact formed a significant bottom out here on October 27th and I suspect that it is, what H.M. Gartley would tell you is to buy the first A to B equals CD. We kicked off the first hour of the show. We looked at that in gold. We looked at that maybe in light sweet good. I can't recall. But we looked at those on shorter-term time frame charts. This is the daily chart. Has more meaning. If we take a look at the A to B equals CD down pattern here, your A point's going to be this high out here on November 21st. That's your A point. Your B point the next day, November 24th. Your C point out here on November 26th. What we had yesterday was a move to the 1-to-1 A to B equals CD, just slightly lower. The 1-to-1.272 is $3.85 out here. The actual low we've seen here today, 3.88. So in essence, this pattern here is completing. You got to see a bullish reversal signal. You're not going to get that today, but you could, in fact, get that sometime tomorrow morning. So at this stage here, the answer is potentially. You've got the pattern that's setting up. Now all you want to see is the bulls come in, paint a sign for you to tell you that, yes, in fact, the Gartley pattern is now in the case of natural gas out there. All right, to summarize, where are we? We didn't even get a chance to take a look at the currency pairs out here. The euro is struggling as we speak this morning. In fact, real quickly, if I go over and take a look at the futures contract here, that way you've got something that is up to speed, no delay out here. Let me get rid of this. Come on, the euro is certainly lower. That's what's putting the supreme strength in the king out here. Now, the euro has not taken out its lows, but the euro, this is a weekly chart. Let me switch over to the daily chart out here. Not that the weekly chart doesn't help, but the euro, if it takes out this low out here from November 7th, that low, by the way, 1.2361, you got lower price coming at you. Right now, you've got the euro futures contract trading right into its market profile low. This should be a decent area of support. That's what's going on inside of that currency pair. With regard to the rest of the day, pay attention to the VIX index. That number, again, is going to be 1451. You're at 1333. You get above that, the sphincter muscle will get tight for those that are long on swing trades, not intermediate trades, not long-term trades. The summation index for the NYSE, still negative. For the composite, still just slightly negative. That says sellers are still in control, and the Dow is the real strong dog out here. It does not want to go gracefully out here. So that's where the hope comes from. It's coming from the Dow. Folks, stay tuned. I'll tell you where hope comes from. It comes from our man Basil Chapman. He'll be up next. He'll spend the next hour with you. Have a great Tuesday. Look forward to seeing you soon. Take care, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.